Good morning. Good morning, everybody. Or afternoon now if you're in the Baltics, Kiev, or further east. Beautiful day here. Very sunny, nice fall day. Going to get right into it on some Bitcoin charts, some updates. Last couple days, I've been showing some more economic figures about Bitcoin. Transactions, fees, throughput. I think we're at the point where we have a pretty good foundation of probabilistically where things can go. Does it mean that they're going to go there when we like or according to the 4-year cycle? Perhaps not. But we are getting a pretty good idea. So, for example, talk about this one a lot. We've got the price here in orange. And then we have what I call the price to sales ratio, which is a fundamental indicator in Bitcoin. It's how many times bigger is the market cap versus what miners make over the course of a year. All right. Peaks tend to be tops. This is a pretty good indicator. All right. So let's just look in here. We had the double top in 2013, April, November. 70x was the top. So a reminder, the number 70 times means the Bitcoin market cap at the time was 70 times greater than the trailing 12 months that the miners would make, fees and new coins in dollar terms. Okay, so once we standardize it, we can get this ratio. Let's see how it called the bottom. Pretty good. All right. Again, no one knows for sure that this would have been the bottom, although it was a pretty big dip here in January 2015. But that turned out to be the bottom. And again, no one knows for sure that this wasn't the top, or this wasn't the top, or this is the top. But in hindsight, we can clearly see that when there's a major reversal, that proves to be the top. Trading is difficult. Right? I'm not a trader. I'm not a technical guy, but you can look at other indicators to find that, because of course here you could have thought that this was the top in summer 2017. The price was 2,800 here. The start of June, by the end of June, this was like Ether summer, by the way. This was ICO insanity. We fell $1,000. SegWit still wasn't activated. Block size wars were still in effect. Obviously, if you had sort of sold here, you would have missed out on all these gains. But generally, I just want to show this because it's a real metric. It's a real idea. All right. In the financial markets, it's called the price to sales ratio. All right. That is the price divided by per share revenue, or market cap divided by total revenue. Bitcoin has revenue for miners, keep the network going. So, question is, of course, do we have blow off top, blow off top, blow off top again by the end of the year, or do we just sort of trudge higher? I don't know. But we can start to measure some percentiles around this. Good morning, Satoto. Good morning. Here's the trend. This is not as good as our power trend on the price. Okay, so this is price is down here. All right, just linear scale. The trend is on the multiple itself, the price to sales ratio, the PSR. All right, 70% is good, but it's not great. But this is generally, it's interesting with Bitcoin. This multiple is higher and higher, also in a power curve fashion. It's the best fitting curve. So again, probably a pretty good time to buy Bitcoin when you're below, and perhaps a good time to lighten up. Perhaps not always, though. You got to pick your poison, right? Because lightening up on $3,000 Bitcoin is not as fun as lightening up on $20,000 Bitcoin, right? Same with 2021, right? Big puke here. Everybody's scared for the world. Within a year, we're at all-time highs. Okay, but this trend catches those things. This curve, I should say. So again, when the dotted black line, the PSR, is well above the trend line, which is the solid black line, could be a good time to lighten up. And this is another indicator, as I've said many times, which kind of shows it doesn't mean this is guaranteed to be this way in the future, but when you have such a run up in price relative to historical levels, it's going to take a long way to sort of catch these numbers again. All right. I'll show you what I mean. So look at the multiple here. The PSR gets up to 145, 150, 160. All right. We fall off, and since we had such a huge run, right, but we also now have this a little bit higher base, getting back up there with the next pump is more difficult. I can't guarantee this would cause the double tops in the future, right? Because if we go back here, they were equal, right? And it wasn't really a double top. It was an all-time high, then a second all-time high. But what is interesting, I think, is the 2021 top. Again, 2017 is a pretty pure top, even though it took us 3 tries. You could say even 4 tries to blow it off. With 2021, look at the price. It has this nice, not nice, but confusing to many, double top, myself included. But the PSR is lower the second time. And then, and down we go. So if you had listened to the PSR ratio here, you could have maybe lightened up your Bitcoin stash, bought more down here. And now where are we now? We're back up above. So the reason we need this trend line, by the way, is because the numbers aren't, I could use log or some other things to try to normalize this ratio, but this ratio is growing, which is actually unique as well, right? Apple, Microsoft, they probably have PSRs of 4 or 5, and they've had them for a long time. A reminder, PSR, price to sales, is not comparable between industries. Price to earnings is, because price to earnings is after expenses. So if you want to just scan the investment world, PSR is not going to tell you much outside of a sector, outside of an industry. So in the, I've never even run this on other chains. So actually I have. In my old site, I did run it on like Dogecoin, Litecoin. But in the universe of blockchains, the only one I really pay attention to is this PSR. And what's interesting is it does grow. It grows and grows and grows. So we used to, we topped out at, like I said, 70 back in 2013, topped out at 115 in 2017, at 150 in 2021, and now we're already at we've hit 163. Notice it doesn't always catch the all-time high, 160, so it's even slightly, right, down. So again, this is something to keep an eye on. If this really starts trending lower and lower, might be something to think about. Here's the evolving trend. I'm going to keep things simple to start. So let's take off the, no, let's take off actually the PSR and look at the trend. Okay, so just like with my other stuff, I have these sort of jagged lines in the future and then smooth in the projection because I want to sort of more understand how wacky things were. So again, really more volatile days here. But like the power curve, which I'll show that analysis in a second, as usual, you know, it's been pretty solid here since 2016. Okay. In fact, actually a little bit under what the all-time curve draws, which is something to consider because actually the all-time trend, if we pull it over here, just the price power trend, so many lines. If we just look at the way the evolving trend works versus the trend, we actually overshoot it typically, right? So we tend to pull this up with big booms and then it comes back down, which is another reason why I think no reason to discount that we will not boom because typically we go above this. Doesn't mean we have to this time, but typically we do. But back to this curve, it's a little bit different, right? This actually is, what this is saying is typically we're pulling that black line down, making lower and lower power trend values. Sorry, lower and lower price to sale values in a regression. It's not a positive or a negative thing. It's just interesting that basically this thing has to keep getting pulled down a little bit more. So let's take the extremes. I don't know why I forgot to put in the 100th. I can do it. This is the 9th, and let's just take the 10th. Let's look here. Okay, so just take the price off for a second. This is, we're looking for extremes on the actual multiple, on the actual price to sales ratio. Okay, so when we get into bubble territory, we're above the 90th, right? Usually, and when we get into bearish territory, we're below the 10th percentile. This is typically how it is for all ratios. If you're doing percentile analysis, it's just how it works. And then we project out based on the trend. So it's nice and smooth in the future, a little bit more jaggedy and behind because I want to understand the multiples above or below trend that this multiple itself can be. So it's confusing. It's multiple upon multiple here, where this one is price and then multiples of price over or under trend. This is multiples upon multiples. So PSR itself is a multiple. All right, and right now we are at 137. So right now, the market cap of Bitcoin is 137 times larger than what miners make in trailing 12 months. That is not historically bubble territory. Doesn't mean that we will definitely go above it this time, but as I've always said, I'm not going to count it out because we've always been above the 9 here. So why can't we be above the 9 this time? Those are my thoughts. And we've always done this every 4 years. Why can't we do it again this time? It's helpful. It's helpful to have this range, okay? Now let's go down from the 9, see where we actually are at. There we are. So we're actually in the 70th percentile, which is 1.5x the trend. All right, so again, the trend line is 86x. Again, it's a multiple of a multiple. So typically, assuming the trend is correct, Bitcoin should be 86 times what miners make. It is now 135 times, so it is bullish. It is extended. And we have been above the 8. We have been above the 8. Let's go back and see how long it took us. Much quicker to get above, right? 7, 8, and then from hitting the 8 here, November 2020 to probably December. Yeah, 1 month. 1 month last time. ...2017 was volatile, right? It was, SegWit didn't activate until here, August 2017. So we had this pump in the spring, then we fell back, pump again, fell back. I'm not showing you this to trade. I'm not showing you this because I'm an expert at trading. Just, I think it's helpful to see where we are, where we've been. So it took us a year. No, let's say 6 months. It took us 6 months to get above the 9 and sort of top out above the 9. All right, so we never know. I mean, we just never know. It took 1 month to get above the 9 in 2020 into 2021, and that was early. And then it was on our typical end of year cycle here in 2017. It took 7 months. And then 2013 as well was a double top. So, every time is different. That's exactly. Such early data here, it's almost pointless to sort of analyze, but you see what it is. We were above the 9 actually by February 2013. Finally ended the top in November 2013. So, but with pretty volatile times in between. Good morning, Hiroshima. No, I have no idea. I saw that charts are pumping. I'm sure if you scan the news, you might find some impetus, but as you know, Bitcoin has these Bart Simpson patterns. All right, so let's just zoom in. It can go up here, then down, down. Sometimes a little mini Bart Simpson. Very volatile asset at the moment, or let's say still. But just to complete the thought here, it's possible that this was the top and we only got to the 8 this cycle, and now we'll just go sideways and maybe start going back down. But as usual, I'm probably as bullish as the rest of you. Typically long Bitcoin. I'm at least not personally betting that. And it's hard to sell Bitcoin anyway. So, we're just going to have to see. But if I were a betting man, and I guess I am betting on Bitcoin a little bit versus other assets, why would we say it's not going to go higher by the end of the year? It's been above the 9 in all 3 of the last times. And then, of course, that 2011 boom as well, which is right when I first heard of Bitcoin, but was not buying. But the Winklevi were. First Mt. Gox hacking happened right here. I think it was the 15th, actually, right there. Or maybe it was the 10th. Maybe it was the 10th. Caused the price to crash. Another point to say Yeah, I don't have this actually handy. I need to find the dominance, or I need to sort of chart it and do even just a percentile analysis. Totally agree. Totally possible here. Although only twice have we had that. Again, with pretty limited data points, to be honest, right? If we're talking 15 years. So November, it peaked here. November, it peaked here for a second time on sort of a scam top. But here was December. So I think it's exciting. I think it's very exciting. And I know there's so many places online to find Bitcoin analysis, but hopefully you guys agree that this should at least give some more comfort on the probabilities. Yes, we're running a little bit hot on these multiples, but we're not exploding. And again, something helpful with a multiple like this is you see precisely how long we've been above it. So here it took 6 months. And again, it didn't even, look at that, it didn't even go above the 8 in November 2021. So it's weird. Double top in price, but the PSR said, be careful of this top because it's already coming down. Here's a nice clean one. November to January, yeah, 3 months here. But also peaked up here twice. So that's how I'm looking at it. That's how I'm going to sort of, to the extent I do adjust my portfolio, which is pretty much Bitcoin versus fiat. This is what I'm going to do. Good morning, Erickson. It is definitely more. That's some TA stuff. I think some technical analysis stuff. Let's go to this chart. There's actually prices in green now. Prices in green. Just very like caveman math. All right, we did. Let's just even call it 1,000, 20,000. We went 20x in 4 years, and then here we only went 3x, although it was like a really choppy, weird 3x. So people are definitely looking at that. It's a good point. From if we went, if we went 20x or slightly less, right? Because it was 1,200 really was the top back here. But let's just say 20x, then we only went 3x. Some people are saying, well, whatever we just did now could have been the top. I understand that sentiment too. Something tells me, though, that analysis is a little bit too simplistic because, the value of the dollar itself is a big part of this. And to be consistent with what I usually say, yes, if the dollar decreases a lot and the Fed pumps money and all central banks pump money, which they are starting to now, and lower interest rates around the world, and et cetera, that can exacerbate the moves in Bitcoin. But I personally still believe that the most powerful thing in the world of Bitcoin is this curve itself. I've said it many times. I'll keep saying it. Just a broken record for those that know me, but for those that don't. This curve itself is extremely powerful. It shows how Bitcoin just gets adopted. It's how networks grow. It's not an exponential curve. The growth of it slows down every year. We're at 42% per year at the moment. 42% per year, which is still amazingly fast, but it does slow. So trying to assign, tops based on like you're saying, Erickson, like 2x. Okay, so if we're right at or slightly under 2x from the last top, that doesn't seem like enough. And I agree with that. But then other people will say, well, we only went 3x from the 2017 top to the 2021 top. We only went 3x from 20K to 60K. So maybe now we'll only go 1.5x or something. More important to me is how that fits along this curve. How it fits along the curve. So what I think is better is this line, number 9. All right, above the same thing, 90th percentile. We get above the 9. Interesting things start happening always. It is true. This was very muted. Right. I'll show you the 10. Okay, so the 10's never going to happen again, frankly. It's just not going to happen. That's 7.8x the trend line at wherever point you draw it, right? So let's even take off. This is the all-time trend just for sort of smoothness. But as it looked at the time, it was like this. So that 7.8x was from the really early days. And it's really one of these points. It's probably this one even. It's not even 2 points. It's not. This one is, if you zoom in enough, see, it's below it. So we didn't have it. We didn't hit it in 2017, and we didn't even really come close in 2021. But still, if you run that here and we just go out to the end of the year on the 9, that's 250 or 2x the trend. I think it's totally possible. By the way, 7.8x the trend, $1 million. It's just not happening. It's not happening this cycle. But I think the 9 is, and I think something a little bit above the 9 could be too. 2 to 3x is the simple math. So the trend itself projected out will be 125 by year end. 2 to 3x is 250 to 350K. Yeah. Also a scammy game, in my opinion, at this moment. I mean, just whales definitely can move the markets more. And if you want to borrow Bitcoin, in my opinion, it's still very high. And it's too very low to lend it. It's just sort of a disconnect, in my opinion, about the debt markets in Bitcoin. Yeah. Good morning, NM. I agree with that as well. I agree with that as well. Put this back up. Another thing, again, why I just wouldn't, I know there's a lot of Bitcoiners that want to go sort of crazy with the ideas of hyper Bitcoinization. I know the world is nuts and we're worried about wars over here, but here's the actual revenue of Bitcoin. So when I talk about the TTM value, it's this. This is the number, the dotted line. This is the number that I take the market cap into to get this PSR multiple, the black line, the dotted black line. All right, so, oops, it's here. We're not even, we're barely back to a top here. But this again is a good moving metric, in my opinion. If we've taken revenue from, say, and again, this blows off, so it's going to be late, but probably better to look at the 30-day, frankly, actually, for the top. So here's the 30-day. This is 30-day mining revenue of the network, fees and inflation. This is what miners pick up. So they picked up 100 million back in 2013. Very briefly, they picked up 1.2 billion in 2018 at the end of the top. Down, up, down, up. 2 tops here. This actually picked the, this matches the price rise because it's only 30-day trailing. Got up to 1.8 billion. Now's the question: how high is this one going to be? So, yes, it seems very difficult to believe that we'll have as beautiful as a top as 2017, because the market's getting more mature. But here we already, with the halving, a lot of craziness around the halving. We got up to 2 billion. So we've already seen a 30-day top of $2 billion that miners have made on what they've mined plus fees. How high can we go now? We're not at a top, but we're clearly climbing again, right? We're climbing the wall of worry. Like, this is not a downtrend. So this is another indicator that is another bullish indicator, in my opinion. It's pretty bullish. We're at 1.6 billion and clearly climbing. So do we top this number out at 3 billion, maybe 4 billion? 1.2 billion miner revenue over 30 days in 2018 was 10, 11 times higher than the 4-year cycle prior. We have not done that now. Let's take off the price just so you can see what I'm talking about. We've only just inched a little bit higher each time. So room for caution, but clearly we're going up again. I do not see this as sort of a dead cat bounce from the halving top or something. That just doesn't seem to make sense. This was an abnormally high top for the halving, right? But it is what it is. I think we at least go to 3 billion. Just have to see. 2.5 billion miner revenue. We're definitely going to be higher. Never say definitely, but we're most probably going to be higher than these numbers before we top. And back to gold. Sorry. Here's gold. Yeah, so I agree with you as well. And here's our range of gold. 10 and the 90. We're way low on gold because of its performance against the dollar. So I still think if you're a Peter Schiff gold bug that missed the bull, now's your chance relatively to buy cheap Bitcoin. Okay, yeah, it only cost you 10 ounces back in 9 or 10 ounces in 2022. Now it's still going to cost you 3 times that to buy Bitcoin, 30 ounces of gold per Bitcoin. But I find it hard to believe that this is going to be too much lower. It's a strong chart for gold. Like, you can see that it's really fighting the trend. You can see with this kink. I don't know if you can tell, but it's really pulling it down at the moment. The lines here are really pulled down from where they should be when you start projecting. So gold is it's going, it's possible this goes even lower. But I feel like we got to bounce soon as far as Bitcoin in terms of gold. So I agree with you. You can. I have not really ever done it. I was thinking today, actually, I was looking at ETH flying. I was looking at ETH over long term. I should probably do it. It's kind of sacrilegious because I'm mostly a Bitcoin guy, but it would be interesting to compare. Start with Ethereum. There's some Caspa meme. All these Caspa guys are saying it's following a power law, but it's not anymore, I guess. But I'm sure ETH is following it. If it's following it as good as Bitcoin, I doubt it. But it would probably be good to run it. And then the other thing, so here's miner revenue, issuance plus fees, right, in dollar terms. I don't think we top until this tops, right? So we have to at least get to 2 billion. And I also don't think we top until this number gets really low. I showed this yesterday as well. This is another sort of economics one, but when fees really eat into the block reward share per day, this is a daily sort of run, then you can start to see that we're topping levels. So here, it's the inverse of this, right? But here fees are 44% of the split. The rest is block reward. Here it got to 25%. And by the way, notice how the second top didn't affect it at all. This is another good indicator of why the second top was really kind of like a scam top. It's very interesting that this one worked as it did, but it's a clear topping signal when your fees are really eating into the share of minor revenue. It's a clear sign of people who want to use the chain. And then, of course, there was a lot happening here with BRC, ordinals, and then the halving. So record actually was the halving day. 75% were fees that day. And we're not even close to seeing barely anything. Yes, the network changed. Yes, there's Lightning Network. Yes, there's sort of trades happening in the ETF world now and Bitcoin Treasury Co's. But again, don't fix what's not broken. This is for selling to really be exhausted. Sorry, for buying, for buying to really be exhausted. I think you're gonna see another big dip in this metric. My pleasure. The dollar is amazingly consistent, right? Again, the actual moving into the projected, it's like just so smooth, looks so nice. Whereas the gold, like I said, you're sort of kinking back up, so it's gold is doing a lot. Gold is making waves these days. We'll see. Vocal fry, too deep. I have done some voice work. Thank you, but I don't know if you know a Hollywood agent. Let me know. I'm not spending too much time these days on any sort of like private projects like that. It's funny though. You're not the first person to say that. Value for value here. You get a lot of stuff for free. Speaking of, really limited ads, no ads. You guys can support here if you want on my website, BTC Pay, right here. And just to show again, this is my site. My browser window is too wide. I have to change that. It's pulling the text out beyond the white area. But this is really the bottom line of the power curve. If you're new here, look at this table. I have it going out to the 10,000th day of Bitcoin, starting on day 505, which was Bitcoin Pizza Day. So that's when I start my pricing analysis. The price for those 10,000 Bitcoins of two pizzas was like under a penny, but the trend line starts at 6 cents. And we see what the power curve is. The rate of growth decreases. Actually, you can't see that on this table, but the time to double increases. This is very different than exponential growth. So here's the actually, I just realized it's kind of badly labeled. This is just time to double. Time to double. So it's 700 days here. We're in the epoch of like we're at 6,000 days of Bitcoin roughly. Okay, you just pick a point. It doesn't matter where you pick. You'll have the same the same ratios. But what stays consistent with a power curve is this. It's the proportion of time, or whatever metric you're using. So with Bitcoin, it's time. This is how the power curve is explaining to us. It's basically for every 12.7 increase in the life of Bitcoin, the price will double. That's what Bitcoin is doing. So back when Bitcoin was only 500 days old, this would only take 64 days. Maybe I kind of said it correctly. I don't know. I could simplify it. 500 days of Bitcoin would only take 64 days. Price would double. Now we're at 5,000, actually 6,000 days. So the price to double is 700 days. But that proportion is locked in at 12.7%. So that's power curve. You can see if Bitcoin was growing exponential, which a lot of people have erroneously said, this would be all the same number. This is exponential growth when this number is the same. And literally the whole world works in exponential in the financial markets except for Bitcoin. It's really wild. Bitcoin grows very fast at the beginning and then slows down. So we are right here, growing it. By the end of this year, we'll be at 42% per year. I'm trying to think, going back to this economic stuff, which haven't revisited in a while for you guys, but 30-day transfer value is also kind of a good topper indicator. It's not. So dailies here, you can barely see it. 30 days here, right? Number 2. So if you look at number 2, it always spikes as well. And where are we now? I mean, spiking a little bit here, around the halving, but not really spiking at all. So it tells me we're not topping yet. Yeah, that's interesting. So many tailwinds, right? I see so many tailwinds that are coming for Bitcoin, and yet people are really, really bearish and scared. I think it's a lot to do with the 100,000 psychology. And if you guys don't follow Checkmate, for sure do it. He's a great follow on Twitter, but as he's shown again and again and again, I mean, we've had a huge amount of Bitcoiners unloading at $100,000. OGs from like 2011. Let me see if I can show his. Let's just broadcast his work for free here. The hodler's wall still stands strong. What do on-chain metrics, futures trading, and IBIT options all have in common? They're all pointing at the same critical price levels. And then let's see what he's got. Good morning, Bob. There's a DC conference, is there not? Right now? Thank you, Fred. So these are short-term hodler cost levels. He's got nice bands. I like the bands. And are we testing the line or the... Yeah, we're testing the line here. This is a very short-term indicator. But yeah, totally possible we dip again. This is not exactly what I'm looking for, but you know, he's got great charts that I absolutely would recommend. Conference is good, yeah. Are we getting some politicians to finally reach out across the aisle for Bitcoin, or is it still this stupid political game, Elizabeth Warren types on the Democratic side? Yeah, it's hard to not look at the price in linear here and not be pretty bullish. I know it can be scary, but if you analyze it in the context of the other indicators, like the chain is just running humming along very normally, and it's not showing at all stretched um, stretched throughput, stretched usage of the chain because fees are so low. The other thing that's interesting is so here's the 30-day of the miner revenue. Again, this is the number that I use to calculate my PSR multiple. But if you look at this over a year, we see a real effect of the halving here. And so this is the number that would compare to, say, the gold market or the oil market, right? Gold market, as I've said, is probably up to close to $400 billion a year now, as far as like an addressable market for gold miners with the gold price so high. Oil market is always $1 trillion at least. It could be like $1.5 trillion. It could be more. It's probably a little bit lower right now with the low prices, relatively low. But it's $1 trillion market. Bitcoin, right here, look at that number 3. For miners, it's only a $16 billion market. Incredibly small, incredibly nascent. And we haven't even hit the top from last cycle. Further evidence that, you know, every top we go higher and higher. By the way, this is the best evidence that we have a little bit to top, in my opinion, because this kind of shows where miners are really treated well versus when, you know, things get overextended. Now, it takes a long time to top. Like the top was really here. You got to look at the 30-day more. But I just do not see that this is somehow we're topping out. We just had, you see that this line just looks like it's been sawed off, number 3, after the fourth halving we had. It was really, the halving did a lot to undercut miner revenue this time at these prices that we're at. Only here did it start to grow again, and now we're growing. And I fully expect this to be at an all-time high when we top again, or if not a few months after. It's not a great topping signal, but it shows you, you know, for sure the cycle's over. If you wanted to be real technical, you can say, okay, when this thing starts to like crescendo out, or crescent, or crest out, I guess is a better word. So it starts to be vertical. I'm looking at the dotted line now. Once it starts to level out here, which is obviously the 30-day revenue is way down. So the trailing 12-month is, this is signs of a top. I don't see that. It's weird. This cycle is very weird because of the halving. Just cuts it off. But now it's growing again. You know, look at the halving here. Actually, it went down. Third halving, it did go down. That's true. But this one's really funny. Just like trailing 12 miner revenues growing, and then completely cut off due to the nature of the Bitcoin system. So, as always, I ramble on about a lot of indicators that I think are signs of tops, and I don't see really any other than the price is high and people are bearish. When you run these percentile sort of analyses, they show you fantastic buy opportunities and fantastic sell opportunities. Selling, of course, is always very difficult. But when it, if you see this thing go into that, I mean, it's just like you just buy. Doesn't matter if the price is falling another 50%, just keep buying. These are really strong trends. Any other charts people want to see? I wanted to actually revisit some interest rates and trading view. Of course, the general markets seem extended. All right, let me put some up. Where do I have the 10-year? 1 second, sorry. All right, here is government bond yields. This comparison's not, unfortunately, going to help us here, but I'm just trying to find a better. It's interesting that France is like close to Italy now, as far as the bond yield goes. Trump wants us way down. The UK and the US are basically the only developed nations that have bond yields over 4%. All right, Poland's growing fast, but they're still at 5.4. Point is, these are coming down. They're coming down, they're staying down, they're coming down. which is gasoline on the fire for Bitcoin. I know I got some dead time here. I'm just looking at a couple other things on TradingView. All right, let me show you. This is actually pretty. I haven't seen this indicator. Not a, as you can tell, or maybe you can tell, I'm not a TradingView super user, but looking at, let me pull up the UK too. Okay. So again, on interest rates, this is pretty cool. If anybody uses TradingView, we've got the yield curve, where it's the different tenors, different durations of bonds, government bonds. And as you see here, the US and the UK is here. This is the UK up here. As far as the short bonds go, they are all way over Europe. Look at Switzerland. The president always gets the interest rate that he wants. He's not getting it yet, but I think he's going to, especially as we move into an election season next year in the United States. So the Fed has been trying to do the right thing. Look at all these different curves for the US. Actually, it's interesting. It has different. Let's just show that. Make it simple. But France, I mean, as you go out on France's yield curve, getting so much more risk than Germany. The Matterhorn is way, way low, even negative still on the short side. It's wild. So the point is, Trump wants these lower. He's probably going to get them. UK is in a tough spot, though. Let me pull out the gold exponential trend, just so you can see again why I just do not think the upside of gold is anything to write home about. So log scale of gold since the 70s. Different time, different markets, 20-year bear market here, but even though gold is screaming above trend, it's got to go a lot higher to take this even exponential trend line, which is faster than a power trend. It's constant higher. This is a 5% trend line. Bitcoin's on a 42%. Even though it decreases, it's a 42% trend line. So even looking out to 2050, the gold trend is still only give me seven grand an ounce. Doesn't mean this doesn't get pulled way up if gold stays elevated for the next 10 years or whatever. But right now, it continues to not look that exciting, if not stretched over historical levels. All right. In my opinion, if you're a gold investor that listened to Peter Schiff for all these years, enjoy these gains and move into Bitcoin. Enjoy where you are and buy Bitcoin at 30 ounces of gold while you can. Not financial advice, in case there's any Peter Schiff gold bugs listening. This is such a killer chart for gold. Got to go back to April 2017 to where we're at 1 ounce of gold for Bitcoin, and that's not coming back. No way. All right, guys, that's all I had for today. A lot of things we can keep looking at, a lot of things we can keep tracking. The best chart remains this chart, and we are just right on trend. What did I pull in here with the pump? I got 115 in my model. I don't even know what corn is trading at the moment, but the trend line itself is, we're literally right on trend. So hard for me to envision that this is anything like a top. More interesting questions can be asked when we start to get above the 9, which I do think we'll hit. All right. Thank you guys for watching. Take care and have a great day. And I will come with more charts tomorrow.